Good morning, everyone. Welcome back to our trading room, our Monday morning trading room. Bear with me a moment here. I'm just finishing loading up my charts. I hope everyone had a nice weekend, especially the mothers. I hope you enjoyed your Mother's Day. All right, here we go. Charts were a little slow loading this morning, but it looks like the market's not really running away on us, which is good. Actually, here on I'm going to punch into this Raptor trade here because we've got a counter trend signal right out of the open. And what I'm going to do is I'm going to move my stop back a little bit. So hold on a second here. Let me give you an overview. That just kind of caught my eye because I've been watching here the hawk unfold, and we've got a late filter entry here on the Falcon as well. We are into the hard edge here on the Eagle, but you can see where the market left off on Friday and where we're starting this morning, pretty much in the same region. Yeah, Aspen says, I hear you've had a lot of rain in your area. Yeah, it's one of the perks of living in the Pacific Northwest. We get our fair share of rain, that is for sure. Not so bad where we are. We're right out on the coast, but certainly in the interior of the province, it's not unusual to see heavy rains in the spring. Now, I don't normally hop into a trade this early. Usually I like to see the market unfold a little bit, but like I said, I was taking a look at this and we had a nice little run up. The market come down, and here right out of the open or prior to the open, we're testing the extreme and we're seeing the market tail off and produce a counter trend signal. Now, it did not print. You'll notice we did not get a number 2 signal printing there. That's not unusual in and of itself. The Raptor will print the vast majority of the signals for you. But occasionally you're going to get one that doesn't print right. Oh, here we're getting a hard edge buy. Now my stop should actually be up here. Oop, I'm going to run my stop in the proper place. I'm going to wait for that reaction, and then I'll know where to roll my stop into. Well, the buyer's looking very, very strong here this morning. Good little push right out of the open. Well, I'm trying here. Well, it's going to be another one of these waiting games, is it? Let's take a look here what's going on with the Hawk. Oh, the Hawk's actually turned a little bullish. We've got ourselves a first micro-macro cross. Possible trend change signal here on the Falcon, and we have had a hard edge bounce in the Eagle. What I'm hoping is that this is your hard edge bounce on the Eagle. So you do have a buy signal on the Eagle. What I'm hoping is that this current move is simply a retest of the overnight high. You can see as far as the daily goes, well, this would be Friday's high here. Hoping to see a little bit of selling come in. Just getting my stop strategy ready for in the event that the market does move lower here. I can bring my stops down. The key is going to be to trade back below these lows right here. That's what I'm looking for. That will be confirmation that the market will try to head lower. Thanks, Floyd. Floyd says, big move on the mid-cap out of the open, smaller one on crude oil. Yeah, it does seem the NASDAQ is a little bit behind the times lately, keeping step with the rest of the markets. Andre is asked, I found a little problem with Trade Manager. I had an open position, and after I requested more days to load on the chart, Trade Manager lost track of the position. Is there any possibility to tell Trade Manager to continue working with this open position? No, and I'm glad you bring that up. If you are in an open trade, do not make any changes to your chart. Wait until the position closes out. So that means do not refresh your chart. Do not reload your data. Do not try to add more days. Do not even try to add indicators. Indicators are actually safe, but it's best not to make any changes while you have an open trade. Your trade, as you probably noticed, only disappeared on the trade manager. You still had an open position. If you checked your accounts on your control panel, you probably still noticed that you had open positions working. That's because when you make changes like adding more data or refreshing your chart or practically any other change to your chart, what you are doing is you are resetting your trade manager. But the good news is your orders are still active. So let's say I did refresh this chart, my trade would disappear. I would still have an active stop working 57.02 half. The problem is now it's going to be very difficult for me to manage. I'm going to have to manage it the old-fashioned way via the control panel. And what I usually end up doing at that time is I'll watch the chart, I'll keep track of my entry, my exits, and when the trade is no longer where I want it to be, I'll just flatten everything. That's the easiest way I found to get out of a position that way. Of course, you can always enter buy and sell orders, right? You can always enter another stop order or a profit-taking order or whatever you like. It's just a little bit more cumbersome. But I'm glad you bring that up, Andres, because yes, it's yeah, I know. Andres says yes, but the target went away. Everything will go away, Andres. If I refresh this chart, everything will go away. And by trying to load more data onto your chart, that's exactly what you're doing, is you're refreshing the chart. The chart reboots, and the trade manager will reboot with it. So my advice to you is, if you are in an open position, just leave it alone until the position closes out. All right, well, I'm still trying to wait out the trade here. Oh, way to go, Tony. Tony says that first eagle signal just hit its profit objective. Oh, well, maybe not all the way there. I'm going for a bigger profit target, but good for you, Tony. I think Tony's running us a swing target in there. The first micro-macro cross also hitting its profit objective, and let's take a look here at the trend change signal, and it's not quite to its target. I got myself, see, this is why I don't usually take trades right out of the gate. You get yourself stuck on the wrong side of the market, and now I have to wait it out. Oh, they're pushing hard though. So we're right up against the first resistance zone, the primary resistance. Okay, good question here from Steve. Steve's asking about the Eagle trade here. Steve asks, on the first Eagle signal, the ATR was not in sync until after the next bar formed. Do we ignore the ATR? I guess, Steve, it kind of depends on the strength of the setup. If the signal, here's my signal printing, here's my ATR. You know, if I'm looking at this and I'm thinking, well, looks like a reasonably strong signal. You know, we're bouncing off the trend line. I may choose to enter on the hash mark versus the ATR. Sometimes you're going to get signals printing where the ATR is way up here. In that instance, it makes more sense, I think, to enter on the hash mark, because by the time the market actually gets high enough to flip over the ATR, you could give up a fair amount of open profit. I agree with you, though, when the ATR is a little bit closer, unless I think, like I said, the signal is looking particularly strong, I'll wait for the ATR to flip. So what that means is that this next bar here actually becomes our signal bar. And we would look to buy above that. And it looks like we're almost there as well. You know, you've heard it said trading is an art, and people say that because there's no hard and fast rules. You can have hard and fast rules. You know, the trading programs all have hard and fast rules, right? They try to experiment with AI programming and fuzzy logic programming and all that sort of stuff, but at the end of the day, the computer will work according to a rigid set of parameters. You can do the same as a human being, of course. You can say, okay, I will not take that trade until the ATR flips over, and then I will enter above. That will be my signal bar. I will enter one tick above there, and I will place my stop 2 swings back, and my profit target will be $200. So you can certainly do that. It's a little bit harder for us because, of course, we can employ discretion. We can look at a chart like this. We can say, oh, that looks like a reasonably strong uptrend. Maybe I will take it on the hash mark. I will get in a few ticks early. The ATR, of course, is merely a filter to help try and keep us on the right side of the market. Normally, when the ATR is in sync, the signals tend to be a little bit more reliable. But to answer your question, Steve, yeah, more often than not, I'll wait for the ATR to get in sync and let that be my signal bar. We put the ATR on the Eagle. I guess it's been a couple of years now. Mike Filigera recommended it. And what Mike does, he's actually a lot more aggressive on the Eagle than I am. What he will do is, if he gets an in-sync signal, so long as the signal is in sync and the ATR is in sync, he will buy it or sell it accordingly. Sometimes, regardless of what the band is printing. Sorry, I had a little bit of a coughing fit there. So let me see if I can find you a good for instance. Oh, like right here. Here is a buy signal. It's in sync with the ATR, but it's against the band. Mike would be all over buying that. He would be okay buying that. There's a sell signal that's in sync, of course. Now, I should point out that Mike is a very aggressive trader. He'll take like 15, 20 trades in a day. But here too, here is a buy signal. It's in sync with the ATR. He would buy that. I don't really know how Michael manages his stops, though. How aggressive he is with his stops. I imagine he's pretty quick to stop out if the trade is not going according to plan. And speaking of trades not going according to plan, let's see how I'm doing here. Oh, we're finally getting that test to the extreme. Yes, Andres, the blue line, red line on the Eagle is the ATR. Now, I don't know, I recommended to Ben that he put this on the default. I'm not sure if he has yet. If your Eagle chart is not showing that, let me show you how to put that on. You're going to go to your indicator panel, and here in all your IW assortments, you're going to find one called IWTM ATR Trail. This is actually used by the trade manager to plot your stops. And you can see if you don't want to use the ATR, you can use the chandelier, you can use a percentage. There's super trend in here. But there's the ATR. You just double click on it and it will show up in your assortment down here. No need to adjust any of the settings. Just apply it and you will have a squiggly red and blue line on your chart. Nicely done, Tony. Tony says, my first Eagle 75% at 20 ticks and the 25% runner. Well done. We might be looking at a little bit of a reverse here. But there's no denying the market is bullish this morning. Oh no, my trade is short, Steve. Steve says your trade isn't filled. Why are you keeping it down there? No, no, no. I'm not. You see that low? That's me. Yes, sirree. I've got the honor of being the person who sold the low of that bar. So I'm giving this trade every opportunity to come around. There will be a bearish move through here. I don't know if it's going to be enough. And the buyer's just not giving it up here at the moment. Well, it's not looking very promising, I can tell you that. But I've stuck it out this far, so we'll ride it out to the end. Just taking a look, I didn't think we were missing any other signals, and so far that's the case. So officially this is the end of opening range, but pretty big run up out of the open. The market's been bullish right out of the gate. Mr. Buckaloo asks a very important question here. He says, I know you were, when you sold this, you were anticipating the number 2 counter trend signal. Why did you not close out the signal when you got the number 3 signal printing? That's a very good question. The way that I like to trade, I like to put my stops above or below specific swing points. You know, I think fundamentally anyway, they provide the best indication of where the buyers and sellers are at. So I think it's fairly obvious that there was some selling going on at this level. I think it's fairly obvious there's some buying going on at this level. So let's say, for instance, I took this number 2 signal, this counter trend signal, and then all of a sudden I come back with a number 3 signal. I've never been a real fan of reversing signals. I tend to get myself into a lot of trouble that way, because there will be periods where the market just chops back and forth. So, you know, to answer your question, you could certainly do that. You could certainly say, oh, okay, now everything's gotten more bullish. Time for me to get out and reverse on this position and look at a buy. If I were short this number 2 trade, however, I would probably keep my stops above there, and I would end up taking the stop out. I don't know if it's right or wrong, but that's just the way that tends to make the more sense to me. And then, of course, the market will add a little insult to injury and go on without you. At this point, I suppose I could reverse on the order, get stopped out, and if it goes higher, just buy in, looking for that number 3 signal to continue. I suppose it's a judgment call, right? In hindsight, I guess I should have left my stop right here instead of trying to leave my stop above the high. If I left my stop right here, I would have got tagged early. I could have reversed and taken the trade higher. It's a very good question, and I'm afraid I don't have a very good answer for you. Other than I found that, as I mentioned, if I place my stops above a significant swing high or low, and if I try to leave my stops alone as long as possible, it usually works out for the best. And those times that it doesn't work out, well, you know, I count on the risk manager to contain my risk. Sure, Floyd. Floyd says, can you put a mid-cap chart up here? 1 second. Tony's bemoaning the mid-cap. Says the mid cap made a nice move higher out of the gate, no real signal, and I hesitated to punch in twice. Woulda, coulda, shoulda. Yes, that's the plight we face as traders. So yeah, look at that move. Beautiful. Pre-market got a cloud crossover signal. This one, by the way, is practically textbook. Nice cloud cross, great pullback into the hard edge. Nice bounce out. Solid signal here just on the open, and boom! Great move. Way to go, Floyd. Good for you, man. Oh, here, before we leave this. The mid-cap does seem to trend very well. I know when I watched it before, that was one of the nice things I liked about it. Produce a signal, it tends to have a little bit of follow-through to it. Here you can see we had a couple hard edge bounces on Friday's session. Nice little move lower. A couple of counter trend signals printing here. It took a little while to get into the swing of things, but it did fall off nicely. Unfortunately, that would have been near the close. That would have been a little bit difficult for me to take. The afternoon session here, very quiet. But the morning, a very strong counter trend signal. About an hour after the open, and this beautiful with trend signal about 5 minutes after the market opened. So if you guys are looking for a market to follow, it looks like the mid cap could be a winner. All right, well, I can roll my stops in a little bit. I'm just going to leave them above the resistance zone here. If the bears are serious about trying to reverse this market, they got a lot of work to do. Okay, we're making a little bit of headway. I'm doing my very best not to get too crazy on this. Okay, the hawk drifting into yellow bars. The falcon now starting to give us a trend change. The eagle, of course, it has hit its profit objective. So very often we will see a market reverse after we've hit the high probability profit target. Kind of hoping that that will be the case here this morning as well. Come on, keep going. There we go. Okay, well now we get a proper counter trend signal. So a much better entry than the one I would have got or have got. But there is a number 2 counter trend signal. Might have to end up riding out another swing here. It's not likely the buyers are just going to go away on a whim. So the target, of course, for this number 2 signal will be the hard edge of the trading band. And we are producing a trend change signal on the Falcon as well. So if this is a signal that you would like to take, your setup will be something like this. You'll have to cover it above the high, because this is a place you're going to know that, yeah, I was wrong. Time to go. Let's get back to all the action here on the Raptor. Oops. Come on. I'm debating whether to roll my stop now above the primary resistance, or whether I try to let the market swing one more time. Of course, there is a real possibility if the market swings from here, it will resume the rally, in which case, of course, I would do better with the earlier stop out. Ideally, I would just like to see it fail at this point, break the median line, and challenge the lows of the morning. It seems to be quiet across the board. I'm taking a look here at the euro. Not much going on there, and not a whole lot going on in crude oil right now either. Steve, coming through with a question here. Steve asks, I saw your Falcon, which was different than mine. I did not have that trend change signal at 721. So I hit reload historical data on my chart, and now it's the same as yours. Should we be doing that every morning? Why does it need historical data to print on the signal there? Okay, You didn't have to reload the historical data. You could have reloaded the Ninja script as well. Both will do the same thing. They essentially reboot your chart. Um, I'm assuming you closed down your NinjaTrader over the weekend. I close mine up every day. I don't know, Steve. You know, sometimes the programming, and I'm not talking about the DTS programming, but I mean the NinjaTrader programming, it does some little funky things. But if you wanted, certainly you could go through your chart in the morning. Again, I don't think I would reload the historical data, but if you're concerned about it, you could refresh your charts or F5 on your keyboard. I haven't really found that it's a major concern, but like I said, certainly if our charts are looking different, then go ahead. Go ahead, refresh your chart. All right, so things really not looking very good for my short position here. We're getting yet another hard edge bounce. It looks like the buyers are going to take the market back. And they're going to rally up. So I'm not holding out a whole lot of hope for my trade right now. Just in case you are also short, the market's going to chop around here a little bit as it attempts to make a trend change. So these are the types of days they don't put in the brochure when you're looking to be a trader. Just the slow sideways progression of the market. And there's not much you can do about it except just wait. Just wait it out. Way to go, Andres. Andres says I traded the 6E all day today. Used the super trend. Let's bring a 6E chart over here. As soon as I find it, 1 second. There we go. Ooh, nice trend through the overnight. Well done. That would explain why they're so subdued this morning. Kind of blew it all out in the overnight session. Not really much going on in the North American. And they are getting close toward the end of their session as well. As you can see, everything is still in a little bit of a transition here, especially with the hawk. We did produce a red bar buy. You could also look to short this red bar buy. That would be an acceptable sell signal if, in fact, the market does reverse from here. But at the moment, things still looking a little bit more bullish than bearish, although I'm doing my utmost to get my trade back to a break even or maybe even profitable position. this is probably going to be the last chance for the sellers to turn this market around. You can see they turned it here, they turned it here, and they're trying to turn it here. If they fail at this point, well, then it's pretty much all done for the bears. All right, well, here come the buyers again. We're really not missing much. Very likely going to get stopped out here, but it's just one of those days here this morning. Just a very, very quiet session. buyer's going to come back here in a second and tap me out. We'll go just above the high of this resistance zone. But I'm not holding out a whole lot of hope. Yeah, like Tony says, there's not a lot of volume on the bars, and that's typical of this type of day where the market is totally uncommitted, just kind of drifting. It does have an upward bias, though. It's going to take some serious patience if this trade is even going to get anywhere near the lows, which does not look all that promising at the moment. Great question here from Andres. You know, when you have one of those days where things not working out for you, Andres asks, what is your max loss for the day? Everybody needs to have some sort of pain threshold where you say, okay, I'm not trading correctly today, or the market just has my number. Sometimes, and it doesn't happen that often, fortunately, but sometimes the market just seems to want to do the opposite of whatever you do. You get a buy signal, the market goes down. You get a sell signal, the market goes up. So you need to have a pain threshold where you say, okay, enough is enough. I'm not going to trade anymore today. For me, that's 5% of my capital. If I take a 5% drawdown, then I know I'm on the wrong side of the market, or my head's not in the right place, or whatever the case. I stop trading if I get a 5% drawdown. That's an amount that I can usually recover in a day or two. So I don't get too worried about it. The danger is when you take a huge hit, you know, when you blow up a quarter of your account or a half of your account, or even I've met a couple of people who have ruined a $20,000 and $25,000 trading account respectively. Those kinds of things, obviously, you can never recover from. So if you have a pain threshold, you know, for some people it's $500 loss, for other people it's a $5,000 loss, but you need to have that pain threshold. And like I said, if you can't think of a number, 5% of your trading capital is usually a pretty good rule of thumb. If you take a 5% hit, then it's probably time to pack up your toys and go come back tomorrow. But that's a very good question. Andre says, my problem is I don't have this threshold. I should take or calculate a logical max loss. Yes, yes, you need to have in the back of your mind an amount that it's going to sting a little bit, but it's not an amount that's going to decimate your account. That's why I said I kind of settled on that 5% value. If you're trading a larger account, if you're trading $100,000 account, certainly you don't need to take a 5% drawdown on a $100,000 account. You could probably take a 3% drawdown and still be able to say, yeah, that's enough for today, no more trading. But for the average, the smaller to average trader, someone trading a $10,000, $20,000, $25,000, $30,000 account, a 5% drawdown, it gives you a chance, it gives the market a chance to offer you a profit while not putting a terrible dent in your account if the trades don't work out for you. And the problem is, if you start losing money, it's very hard to remain objective, and the emotions start to run a little high, and then you start doing things like flipping on your trades. You start to see things that aren't there. You'll watch your chart, and the market will all of a sudden accelerate higher, and you'll hit the buy button, and then of course what happens? It stops. And then you think you see it going lower, and then you'll hit the sell button, and of course what happens? It stops. So, those kinds of things are what you want to avoid. You want to keep your wits about you, really, is what it boils down to. I'm sorry this morning was a very poor example of how you should trade. I broke one of my own rules, punching into a trade right out of the open. That is not what you should do. And it kind of got me stuck. Got stuck so that I couldn't take advantage of other signals when they presented themselves. All right, well, the market is obviously bullish for today. Yeah, way to go, Aspen. Nicely done. Aspen says, because I'm new, I'm just focusing on the high probability signals. He says, I took a small loss on this number 2, but the number 3 signals working out very well. And really, Aspen, you should have been hosting the room this morning, because that's exactly what you should be doing. All right, boys and girls. Yeah, thanks, Andres. No pressure. Andres says, I should tell you, you're the mentor. Yeah, okay. Most of the time. Most of the time. I still make my share of mistakes, even after all these years. We all do. It's funny, you can look up any successful trader, and there's always a period where they all kind of hit the skids, and you wonder, how can that happen to them? Well, that's just the nature of trading. Okay, I think we're going to close up shop here. The market's obviously bullish, so if we get another pullback here, we might see a little bit of a rally. If the sellers do get serious about trying to knock the market down, I'm not sure we're going to actually see them make any gains to the short side. Rather, it seems more likely the market may end up moving in a bit of a sideways fashion. But we'll get back tomorrow, and hopefully we'll have or I'll have a better day tomorrow. All right, we'll see you tomorrow then. Bye for now.